Thank you for the insight. Now let's turn our attention to the enhancements that deal with the itemized deductions. I keep hearing about impacts to SALT. Panel, please explain, first of all, what is SALT? And then secondly, how the changes impact or may impact the people that are in this room.
Yeah, Chuck, I'll talk about this one. So SALT stands for state and local taxes. If you guys recall, TCJA limited the amount of state income tax, local income tax, real estate tax, property taxes paid if you itemized to $10,000. So it hit taxpayers hard who were paying a significant amount of income tax or real estate taxes. Pre-2018, there was no cap, so it was a big issue. Well, what they've decided to do with this bill is allow that limit to go up to $40,000 if your income is below a $500,000 threshold if you're married. However, that 500 is an adjusted income number. That adjustment adds back in tax-exempt income. So tax-exempt interest, non-tax Social Security, other forms of income that weren't necessary on one of the line items on page 1 of your tax return. So you have to do some planning to know if you're going to be above this threshold or not to be able to get the increase deduction of the $40,000 limitation. This does sunset in 2030. It will go back to the $10,000 if legislation isn't passed. And this starts in 25. This is not a January 26 effective date. Again, you heard me say this before, but really looking at your projections and doing multi-year and figuring out what years are going to be the best years to take advantage of certain deductions. The last time I spoke, I said we're going to, try to increase income. This situation, you would want to try to decrease income. So you're going to do things, making sure that you're fully funding your pre-tax 401k. You're going to do any deferred comp mechanisms that you may have at your employer, looking at doing installment sales instead of full gain recognition, trying to defer that income so you can take advantage of those additional deductions in certain years.
Yeah, along those lines too, Amanda, if you recall, there's something out there called PTE, that's the pass-through entity tax. Well, that's a state-by-state implementation, and currently all the states, at least the ones we've looked at, still have PTE. Now, pass-through entity tax is what the business can deduct for the state tax that they owe. And as they did that because of the SALT limitation in order to bypass the $10,000 limit. Well, the states still have that enacted, and we're monitoring it to make sure that when we're doing the taxes, that we're making sure that the state has not revoked that and it's still implemented. But what that allows for is the business to still deduct the PTE payment and get the $40,000 SALT limitation. So, I mean, it's a twofer. We still get the PTE plus the $40,000 increase. So that's part of the tax planning we do with the business owners as well.
And Heltman, with every good result, we get a negative one from Congress. The negative one in the itemized deduction world is that they've decided to cap the effective rate of itemized deductions for the top tax bracket. So anyone in the 37, essentially above the 35% bracket, any itemized deductions are capped at the 35%, effectively saying you're not getting, no matter how much your itemized deductions are, we're not going to give you the benefit. So that essentially it's a complicated calculation, but essentially it causes the rate actually to go up because you're not getting benefit of the itemized deduction if you're in that top bracket. So the top bracket for married couples over $750,000 in taxable income. So it doesn't affect that many people, but what we see is income will spike in certain years because something sold, a vacation home is sold, something is sold, or there's a business transaction, something where the income is spiked. And so that provision starts next year. So again, one of the things we're looking at between now and the end of the year is anyone where this year they're going to have a spike in income and they're looking at where they could be in that highest tax bracket and they have a lot of itemized deductions, or they're looking at the possibility of doing something where they could accelerate the itemized deductions into this year. This is the last year that people in that tax bracket are going to be able to take those itemized deductions without that 2% haircut.